It is 8:27 a.m. Pacific Standard Time. It is the third day of the third month of 2026, and this is episode 1269 of Bitcoin and bombs are falling again. And retaliation from Iran is happening as well. It's ongoing. Who knows when this shit stops? I want it to stop. I really do. I want it to stop. I'm looking at oil prices spiking, and I have a vested interest in oil prices going up. I do. I will admit that plainly. And even I'm like going, no, I don't need any inflation fears. And it's just, the world markets are already fragile as it is, and any inflation is just not gonna be conducive to markets. But this is going to wash out. This is going to wash out a lot of people. I mean, the Dow is down like 1,100 points right now. So and gold got smacked around the head and shoulders, and silver was basically thrown around the room like a dead rag doll. So it's not just Bitcoin. It's like everybody's freaking out yet again. We're just freaking out. We're going to be freaking out for a while. I don't know how this helps Trump in the midterms, but it is what it is. And I guess what we need to do is figure out, do we believe that this Iranian thing really is about nuclear weaponry, or is there another story behind it? Of course, you know what I think. I think there's another story behind it, because Iran has been 5 weeks away from developing a nuclear weapon for 15 years. It's like always 5 weeks away or 6 weeks away or something like that. We've been hearing it for well over a decade. Is it really about nuclear weaponry? I think that's, I think that's a good pretense, because clearly they have a nuclear program. But is that the whole reason why we're doing this right now? I mean, it doesn't make a lot of sense for Trump to do this close to the midterms, unless he's got a clear finish line that is clear to everybody else too. Like the whole mission accomplished banner on the aircraft carrier after the Iraq stuff. Yeah, and it dragged on and on and on and on after that. It was clearly not accomplished. If Trump actually gets something accomplished here and regime change in Iran happens, and you start seeing Iranian women walking around in miniskirts like they were doing back in the 60s, that would be mission accomplished. And honestly, that would work really well for him in the midterms. Will that happen, though? That's the big question, because that would have to happen. And I don't know. I don't see that happening. We are seeing, however, an exodus of Bitcoin and shitcoins outflowing from whatever Iranian exchanges are over there. And we are going to also be talking about Senate advancing a housing bill that has a CBDC ban written in its language, which I thought was odd. Then we're going to talk a little bit about Jamie Dimon, who looks like he might be capitulating a little bit on the whole stablecoin yield activity, which I knew was going to come because there's no way to stop that shit. Then Tether and Lugano launching Plan B Phase 2. Mara came out with some, less than perfect news. We'll talk about that. And then senators are calling for an investigation into Binance as well as sanctions. St. Cloud, another credit union called St. Cloud Financial, rolling out integrated digital assets. And then we're going to finish off with Trump's CFTC appointment in the crypto space. So I promise we'll get to it. So as bombs fall on Tehran, Iran's crypto lifeline lights up. Micah Zimmerman starts us this morning from Bitcoin Magazine. Within minutes of the first U.S.-Israeli missile striking Tehran on Saturday morning, a different kind of exodus was already underway. Crypto outflows from Nobitex, which is Iran's largest cryptocurrency exchange, surged by 700%, according to analytics firm Elliptic. The spike was capital flight, executed in real time by Iranians racing to move money out of a country suddenly under full-scale military bombardment. Nobitex processed 7.2 billion, that's billion with a B, dollars in crypto transactions in 2025, serves more than 11 million users. It allows Iranians to convert rials into crypto and withdraw to external wallets, which is a direct pipeline around the country's crippled banking system and the web of international sanctions that are choking it. Elliptic's initial tracing of the weekend's outflows shows funds flowing to overseas exchanges that have historically received significant Iranian inflow, suggesting the crypto is being moved out. Let's pause. Iran is a sanctioned country. This may be why we've got such a row going on in the United States government with what Binance has been doing. Maybe some Iranians knew beforehand, and maybe they're still processing transactions from Iranians, that's a no-go according to the United States sanctions. So these guys are trying to get their money out. And I hate to say the word, crypto is a good way to do that. So how much locking down can the United States government actually do? This is going to be a test. It's going to be a big test. Let's continue. Elliptic flagged similar spikes earlier this year. A massive outflow on January the 9th coincided with widespread anti-regime protest and a government-imposed internet blackout. Even during that blackout, some outflows continued, raising questions about who retains access to Nobitex's holdings when the platform's website goes dark. Two additional surges aligned with the announcements of fresh United States sanctions on Iranian actors, and each time it was crypto that served as the escape hatch. Quote, the outflows potentially represent capital flight from Iran that bypasses the traditional banking system, said Dr. Tom Robinson's Elliptic's co-founder. The strikes, codenamed Operation Roaring Lion by Israel and Epic Fury by the Pentagon, hit at 9:45 a.m. Tehran time on Saturday. Of course, targeting nuclear facilities and missile sites in the Pasture district in the capital where Supreme Leader Ayatollah Ali Khamenei resided. Iran confirmed Khamenei's death hours later, along with other top officials. Crypto markets reacted instantly. Bitcoin plunged from 67 to 64,000, shedding 5% in minutes. The total crypto market cap dropped 128 billion as forced liquidations cascaded across exchanges. And then came the snapback. The news of following events briefly pushed Bitcoin back above 68,000 as traders speculated that the regime's decapitation might shorten the conflict, but the rally fizzled as Iranian retaliation made clear that this was just no contained event. By Sunday afternoon, Bitcoin had settled around 65,300, and at time of writing, Bitcoin is flirting with 70,000. Quote, the positive performance of the crypto market today can be explained primarily by a significantly more restrained reaction than anticipated, Thomas Probst, a research analyst at Kaiko, wrote to Bitcoin Magazine. He noted that when U.S. equities opened slightly positive on Monday, it reinforced the upward bias with Bitcoin approaching 70,000 and major altcoins posting gains of 6 to 10%. Open interest also climbed on February the 28th, showing that traders were adding new positions rather than reducing exposure ahead of the event. According to Axis, this behavior indicates that the market had largely priced in the geopolitical developments and was no longer viewing them as a major threat. Still, the options market tells a more cautious story. On Deribit, 1.9 billion in Bitcoin put options were stacked at the 60,000 strike price over the weekend. Timot Lamar, director of market research at Unchained, said Bitcoin's reaction to periods like this challenges the idea that it trades only as a risk-on tech proxy and instead reflects growing recognition of its role in times of counterparty risk. Quote, much like we saw during the banking crisis in 2023, when the market runs to Bitcoin in chaos, it gives a glimpse into more people understanding Bitcoin's value in a chaotic world full of counterparty risk, Lamar wrote to Bitcoin Magazine. The conflict's economic ripple effects extend well beyond crypto. Iran's Islamic Revolutionary Guard Corps announced that no vessels would be permitted to cross the Straits of Hormuz, through which roughly 1/5 of the world's daily oil supply passes. Oil futures surged at Monday's open. Goldman Sachs projected oil could hit $100 per barrel if the conflict persists for the 4 to 5 weeks that President Trump suggested in remarks over the weekend. For Bitcoin, the Iran crisis underscores a fundamental tension. Crypto was built to operate outside state control, and Novotex's 700% outflow spike proves it can. But that same utility makes it a front line in the shadow financial world between Western sanctions regimes and adversarial states. So, yeah, it's going to be interesting to see just how much squelching the United States and other Western countries can put on this. Because we're not supposed to have no exchange outside of Iran, as far as any, or at least any of them that are under Western control, are really supposed to be doing business with any Iranian citizens at all because of the Iran sanctions that we've had in place for a long time. Is Binance directly implicated in this? I would say they'd have to be. Binance is going to be one of the go-to places for everybody. That's just how big Binance is. So let's put that to bed for a little bit. Let it have a little nap while we move to Senate in the United States. Advances housing bill with CBDC ban, draws White House backing. Sebastian Sinclair, Decrypt.co. The United States Senate moved forward on Monday on a sweeping bipartisan housing package that includes a provision barring the issuance of a central bank digital currency, an unusual pairing that has pulled digital asset policy into a debate traditionally focused on housing supply and affordability. Lawmakers voted 84-6 to advance the 21st Century ROAD, R-O-A-D, all in caps, to Housing Act. The Road to Housing Act. Oh, that's just great. These guys need better PR, guys. Anyway, that's according to Semaphor's Congressional Bureau Chief Burgess Everett. It's a compromise measure that combines long-standing housing initiatives with provisions sought by House Republicans, including a prohibition on a Federal Reserve-issued digital dollar through the end of 2030. Oh, it's not a complete ban. It's just you can't really do anything until, 4 years from now. That's not enough. 40 years isn't enough for a ban on CBDC. 400 years is not long enough of a ban on CBDCs. Nobody should put up with that shit. Anyway, just say. The CBDC language appears in a standalone section of the bill, embedding limits on a U.S. digital dollar in a major housing vehicle rather than standalone crypto legislation. Quote, the Board of Governors of the Federal Reserve System or a Federal Reserve Bank may not issue nor create a central bank digital currency or any digital asset substantially similar to a central bank digital currency, either directly or indirectly through a financial institution or other intermediary, a copy of the bill's text reads. The provision was reportedly added at the urging of House conservatives who had pressed leadership to secure a CBDC ban as part of earlier compromises on crypto-related measures. The White House quickly issued a statement backing the legislation, highlighting both its housing affordability provisions and the CBDC restriction in an unusual step for Democrats who have generally resisted efforts to preemptively bar the Federal Reserve from studying or developing a digital dollar. Quote, if the Senate amendment to H.R. 6644 were presented to the president in its current form, his advisors would recommend that he sign it into law, according to a screenshot of a White House statement provided by senior reporter and co-author of Punchbowl News' Vault, and his name is Brendan Pedersen. Federal Reserve officials have previously said the central bank would not issue a CBDC without explicit authorization from Congress, and policymakers have framed ongoing work as exploratory. Housing advocates have focused on the bill's expansive scope, which includes measures to boost housing supply, limit institutional ownership of single-family homes, and streamline development and financing programs. But the inclusion of digital currency policy has drawn fresh attention from financial and technology circles, where debates over privacy, surveillance, and the role of government in payments remain unsettled. The bill must still be reconciled with the House before reaching the president's desk, and it remains unclear whether that CBDC provision will survive final negotiations intact. That's not the important part. That language may not survive at all. The fact that it's even in there, is like freaking amazing, because lawmakers voted 84-6 in the Senate, which means they had a lot of Democrats voting for this thing. And it provided language to ban CBDCs. And they're like, let's vote on it anyway. So maybe they're getting a little closer to going, yeah, you know what? Maybe CBDCs are not the greatest thing in the world. This is actually good news. Even if the language doesn't survive, at least we know there is a surviving seed of sanity about at least CBDCs somewhere in the United States Senate. On to JP Morgan CEO Jamie Dimon. He says stablecoin yields should face bank-style rules and calls for a level playing field. Now, this is Naga Avan Nomeo. Love that name. Nomeo, please. From the block. But before we get into it, that sounds like capitulation. And what do I mean? In case you haven't been following the coverage that I've been providing you guys on this whole stablecoin yield and the banking lobby on stablecoins themselves, then you haven't understood that the banking lobby, which represents the banks of the United States, and we're talking Wells Fargo all the way down to your corner, like regional bank, they do not want stablecoin yields. They've been yelling about this for a year. They do not want that. Why? Because they will not be able to provide, they will not be able to compete for deposits with people like, that are going to be in bed with Tether and Circle and the Trump family and some of these other guys. They cannot provide 4% interest on their deposits, which means that the deposits are going to flow out of the bank and into any instrumentation provided to those people that will give them somewhere between 3 and 5% yield, and if they convert United States dollars or whatever into stablecoin. The banks won't survive it. And here we have Jamie Dimon, probably the most well-known banker that is not a Federal Reserve or central bank banker in the world, saying, well, if we can get a level playing field. I wonder what he means by that. JP Morgan CEO Jamie Dimon said banks are pushing for a level playing field with crypto firms, warning that stablecoins offering yield should be subject to the same regulatory framework as traditional bank deposits. Speaking in a televised CNBC interview, Dimon said that if companies want to pay rewards equivalent to interest on stablecoin balances, they should be regulated as banks. Quote, the banks feel strongly that rewards, they keep using this word, that rewards are the same as interest, Dimon said. Quote, if you're going to be holding balances and paying interest, that's a bank. You should be regulated like a bank. End quote. He suggested a compromise could allow platforms to offer rewards tied to transactions rather than balances. However, he drew a clear line at interest-like payments on idle holdings. He's not capitulating all the way. Quote, if they want to be a bank, become a bank, he said, pointing to the capital, liquidity, transparency, and reporting requirements banks must meet, along with FDIC insurance obligations, anti-money laundering rules, and community lending mandates. Dimon emphasized that JP Morgan supports competition and blockchain innovation. The bank has developed its own deposit token and uses blockchain technology to move money and data in real time. He said, quote, we're in favor of competition, but it's got to be fair and balanced. And I'm almost about to crack up laughing because there is nothing in this man's history that suggests that he wants competition and that he wants to be fair and balanced. No, he's a shitbag. But I digress. The debate centers on stablecoin yields, a key sticking point in ongoing negotiations over broader crypto market structure legislation. Now, the Genius Act, signed into law in 2025, established a federal framework for payment stablecoins requiring 100% reserve backing and high-quality liquid assets and imposing strict compliance standards. The law bars issuers from paying direct interest on stablecoins, but does not explicitly prohibit third-party platforms from offering rewards. Banks have argued that yield-bearing stablecoins could draw deposits away from traditional institutions, particularly community banks, potentially creating risks to financial stability. The issue has surfaced repeatedly in Senate Banking Committee hearings and White House-hosted meetings between bank executives and crypto firms. Now they're all negotiating the Clarity Act, a broader market structure bill that could address the treatment of stablecoin rewards and delineate oversight responsibilities between banking and security regulations. Regulators have also moved towards implementing the Genius framework. The Office of the Comptroller of the Currency just last week issued a proposal outlining how it intends to supervise stablecoin issuers under the new law, opening a 60-day public comment period. Okay. So Jamie Dimon is, I hate to say this, but he's actually kind of right. Okay, that's why they're using the word rewards and not interest. And who's using the word rewards? Well, the stablecoin guys and the stablecoin, legislation / regulation guys. They're using the term rewards because they don't want it to actually say interest. Because if it was interest, then Jamie becomes right. And they need to be regulated the way that banks that offer interest on idle assets would be regulated. And that causes other problems for the Genius Act. It makes things a little bit more sticky. There's a lot more red tape. Things don't get pushed out as fast. And they want to move. They want to move on this. They want to get Clarity Act. They want this housing thing, which also has the whole CBDC ban language inside of it. So that would be good. But, if they are going to offer interest, then there's no escaping the fact that they would actually have to be legally responsible to be regulated like a bank in the United States. And I'll bet you, that regulatory moat that is probably a mire of tar and feathers and icky monsters with nasty, sharp, pointy teeth is exactly what Jamie Dimon wants, because he's like, we know how to regulate or we know how to navigate this regulatory moat because we're the ones that designed it. So it's like Brer Rabbit. If you've ever read that story about Brer Rabbit getting thrown into the thicket of thistles, he's like, no, please don't throw me into that thicket of thistles. He was a rabbit. He knew exactly how to get through that thicket of thistles. It's the same thing with Jamie Dimon and all of his banker buddies. They know how to navigate that shit. Toot sweet. But these new guys, it's going to be a little bit different for them. Yeah, that's probably why they need to go get some GreatGhee with my friend Ghee, or GreatGhee at GreatGhee.com. That's GreatGhee.com. And also, he wants me to use my affiliate link. And my affiliate link is in the show notes. Use that link. And if you do, then everything you buy, you get a discount on. Wait a minute, hold on. Let me see. I need to actually make sure. No, you're not getting a discount, but it does tell them that I made the sale for them over here in the Circle P on the Bitcoin and podcast. Circle P is where I bring plebs with goods and services just like you to plebs just like you that want to buy said goods and services, but you will buy it in Bitcoin, because if you're not selling it in Bitcoin, you're not in the Circle P. But GreatGhee definitely is a treasured vendor because he has the best ghee. What is it? It's a high temperature animal fat. 100% grass-fed butter is used to make this ghee. And all it is, ghee is basically a way to preserve butter. You basically cook it until all of the solids and residual sugars and any of the other impurities kind of fall to the bottom, stick to the pan, and all you're left with is the fat that's in butter. Because I don't know if you knew this, but butter isn't 100% animal fat. There's still a lot of protein in that stuff. And that's what can go bad. That and the fact that when you do this cooking process, you essentially evaporate any of the water that was left over, and there's quite a bit of water in butter. When you do that, you don't give bacteria enough water or enough protein to be able to live, grow, and be happy. In fact, they're miserable and then they shrivel and die. And that's why this is shelf-stable animal fat. You can just put it on your shelf at room temperature. It's fine. You'll be fine. I mean, I wouldn't keep it open, after you've opened it, I wouldn't keep it up there for like a year. I'd definitely try to use it before that, but you don't have to keep it in the refrigerator. And this stuff makes everything taste great. If you were going to cook, put a dollop of butter on your cooked steak, try putting a little bit of ghee on it. It's got a more of a toffee tone. It's not sweet at all, but it invokes that sweetness in your olfactory system because of the way the chemistry works. I won't get into flavor chemistry, but go to GreatGhee, use my affiliate link, and that way he knows that you heard about it here on Bitcoin, and get your grass-fed A2 ghee cooking fat directly from GreatGhee. Use my affiliate link. Now, Tether and Lugano launch Plan B Phase 2, targeting global leadership in digital infrastructure. Micah Zimmerman, writing for Bitcoin Magazine, and he says stablecoin issuer Tether and the whole city of Lugano today announced the launch of Plan B Phase 2 from 2026 through 2030, marking an expansion of the city's initiative to integrate digital assets and decentralized technologies into public and economic infrastructure. Building on the pilot projects of the original Plan B launched in 2022, Phase 2 emphasizes structural development, technological resilience, and long-term digital sovereignty. Over the past 4 years, Lugano has emerged as a European leader in real-world adoption of digital assets. More than 400 local merchants now accept Bitcoin, Tether's USDT stablecoin, and the city's own LVGA token. Municipal services have experimented with digital bond issuance and select blockchain-based payments, integrating decentralized systems into public finance. Tether's involvement has provided technical support, infrastructure, and strategic guidance. A central component of the initiative is POW.space, a physical hub created to foster blockchain and fintech innovation. The space has attracted over 100 companies, positioning Lugano as a bridge between traditional financial institutions and decentralized infrastructure. Complementing all this, the Plan B Forum has grown into an international platform attracting more than 4,000 participants from over 60 different countries, facilitating discussions on financial sovereignty, digital assets, and resilient urban infrastructure. Phase 2 is structured around 5 strategic pillars. The first focuses on institutional infrastructure for digital assets, developing Swiss Ledger as an open blockchain for banks and enterprises. The second positions Lugano as a hub for digital trade and commodities, leveraging tokenization and programmable payments to modernize trade flows. The third pillar addresses privacy, preserving digital identity, enabling voluntary and secure verification of citizens, businesses, and autonomous agents through zero knowledge technologies. The fourth emphasizes the development of decentralized artificial intelligence and autonomous economic agents, creating an integrated ecosystem for public services and programmable transactions. The fifth and final pillar seeks to establish resilient urban digital infrastructure, including distributed networks, decentralized computing, and advanced cybersecurity systems to ensure operational continuity in critical service. Tether is committed up to $6.3 million over the next 5 years, primarily in the form of expertise, infrastructure development, research, and applied training, while governance and oversight remain fully with the city of Lugano. Initiatives will follow a rigorous framework of pilot projects, compliance evaluations, and iterative scaling, ensuring public accountability and risk management, because we got to manage that risk. Paolo Ardoino, Tether CEO, said, quote, Phase 2 focuses on infrastructure, resilience, and local capacity building. Our goal is to support Lugano in becoming a globally relevant digital infrastructure hub while preserving public governance and autonomy. Mayor Michelle Folletti added, quote, by 2030, a city's freedom will increasingly depend on its ability to govern its data and essential services. Plan B Phase 2 invests in open, resilient, civic digital infrastructure that safeguards public interest. Okay, this is good. I like the fact that the city of Lugano is stretching out like this. But it means when the mayor said that a city's freedom will depend on the ability to govern its own data and essential services, think about it like this. How many private companies are attached to city services and colleges? And what I mean by that is, like, instead of, like, I don't know, let's take the city of Canyon, Texas, for instance. Instead of them having their own infrastructure, they just reach out to a third-party vendor for, like, I don't know, billing for property taxes or whatever else. If you got to pay like a municipal, like a parking ticket or something like that, they're reaching out to third-party vendors. They're not able to develop their own. Wouldn't it be nice if all these municipalities had a rock solid, free and open source software library to choose from to be able to do these things? Instantly implementable, completely, like non-connected to anybody else, any third party, and easy to actually install and operate and perform maintenance and updates on. And it works. See, that's the kind of stuff that I see coming out of things like Phase 2 in Lugano with the support of Tether. Not just digital assets, but being able to essentially silo all of your services. And I brought colleges up because, like, there's whole programs inside of, like, let's take tutoring in college. There's tutoring services that you can go and you pay for with your student service fees, right? So you can go access this. If you're in college and you need a tutor, you need to go ask the provost office where you can find said tutoring. So with that said, you may find that systems that are in place to do scheduling of tutors and all the stuff that go along with that is actually not provided by that university or college itself. It is a third-party private vendor, and they're the ones that own all the data, and they have a contract with the school, and the school can't get out of the contract when the services go sour, yada, 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 yada. Wouldn't it be nice if there was a library of free and open source software that a college would be able to leverage and say, we can just use this and be able to implement it and maintenance it and update it and have it relatively siloed against all third-party vendors and anybody's prying eyes? because that's where this needs to go. And that's one of the things that I really, really hope for falling out of phase 2 over there in Lugano, which I would love to go see, but I'm not prepared to pay $10,000 for a round trip ticket to go to Lugano. If somebody wants to buy that ticket for me, let me know. Let me know. All right, let's run the numbers. CNBC futures and commodities, and woo doggy. Brent North Sea is up another 6.4% to 82.75. West Texas Intermediate crossing $75 a barrel after a 6.25% rise. It was, both of those were up in the 8% ranges earlier this morning, and they've come down off of their highs quite a bit by, like 1.75% in some cases. Natural gas, though, is actually up 5 full percentage points to $3.10 per thousand. Gasoline up 4.1, getting real close to $2.50 a gallon, guys. Murban crude is up 4% to $81.73 a gallon. This does not help inflation matters. It accelerates inflation, which means the Fed is less likely to lower the federal funds rate, and they might even raise them. And this is not good for risk assets like Bitcoin. That's the way this runs. This is why, even though I've got a vested interest in oil, even I'm looking at this going, Dad, that's going to shock the shit out of people. And I'm not talking citizens. I'm talking like whole institutions and countries right now. If you're one of the people that always freaks out about like the war with between Russia and Ukraine, at $65 oil, Russia does not do well. But at these prices, Russia does very well. Very well indeed. So now these prices get to fund that Ukrainian war a little bit. I mean, I know it's not funny at all because the Ukrainian citizenry is paying the price. Whereas all that really has to happen is the Ukrainian federal government just needs to go down. Let some new people take over and make nice with Russia so that Ukrainians can live and breathe again. That's all it really takes. But metal, not doing well. Yeah, because they're considered kind of a risk asset as well. Palladium down 6.5%. Gold is down, oh my God, a line of dead pixels on my screen. 3.79% to 5,115 and 9 dimes. Platinum is down 10.25%, double digit dip. Silver down 6.9% to 82.65 an ounce, and copper is down 1.5%. Ag not doing all that well either. We've only got 2 in the green today. Sugar is the winner, 0.29% to the upside. Biggest loser is rough rice, 1.25% to the downside. Live cattle up 0.15%. Lean hogs down 1/4. Feeder cattle at 0.11% to the downside. S&P is down 1.25%. NASDAQ is down 1 1/3. The Dow is down 1 1/3. And the S&P Mini is down over 2 full points. By the way, the Dow is off of its lows. So it was down by 1,100 points when I was taking my kids to school this morning. It is now only negative 659. So I guess that's good for us. $68,010 gets us a $1.36 trillion market cap for Bitcoin. We can only purchase 13.2 ounces of our favorite shiny metal rock with our one Bitcoin, of which there are 19,997,138.66 of. Average fees per block remain the same, 0.02 BTC, taken in fees on a per block basis. There's over 30 blocks carrying 42,000 unconfirmed transactions waiting to clear at high priority rates of 5 sats per VByte. Low priorities get you in at 2. And hash rate dipped a little bit, 1.03 zettahashes per second. It's the hash rate of the Bitcoin network, and that's all the security that I would ever really need. From straight to Iran, yesterday's episode of BitcoinAnd, I got Noster Gang with 100 sats, says Tism. I don't know what that means, but okay. Oak Grove with 1282 sats says legal lobster person series 2. All right. But what is a legal person? We can all explain what a natural person is, I hope. Anything in the Homo genus is considered a human where the name comes from and considered a person. Well, a legal person would be any type of corporation. All right, I'm suspicious. We'll get into how we know they have personhood tomorrow. And I already know the answer to that. It was I'll let Oak Grove talk about it. Oh, wait a minute. Oh shit. I went out of order on Oak Grove. And here he is with the first part of that. 1280 sats accompany this boost. Legal Lobster Person Series 1. Back in the day, oh no, that was from yesterday. That's okay. So I'm good. Everything seems to be okay. Things are just out of order because Nick Dose, was it? Yeah, Nick Dose. Hold on. We got a little funny business going on here. Nick Dose. Where'd you go? Ah, there it is. 161 Sat says cheers. Yagro with 210 says Bitcoin Core is not the central source of truth when it comes to Bitcoin. Their history and current TEA, I'm not sure what he means by that. Their character, actions, past, and its dynamic are all very questionable in my mind. I don't think they have Bitcoin's best interest at heart, but that doesn't mean Luke Jr. is a saint. But Knott's side makes a reasonable argument for Bitcoin being strictly money, and Core rather than engage in discourse decides to go on the attack. Can you blame Knott supporters for associating this with pro-pedo behavior? I don't see why pedo keeps coming into this. Why is pedo here? I mean, that doesn't make any sense to me. Is there a picture of at least one naked child somewhere embedded in the Bitcoin blockchain? The answer to that question is a resounding yes, there is. And we've known it's been there for fucking years. We've known it's there. We've been through this goddamn argument before. The point is it a valid transaction? If it is not a valid transaction, it doesn't get processed. If it is a valid transaction under the consensus rules of Bitcoin, the fucker gets processed. I don't care what's in it. I don't give a shit. Would I rather there not be pornography involving children? Yes, of course. I do not want that shit on the blockchain. There's no filtering that you can do that will not be turned on other transactions that do not represent the shit that you don't want. You don't want child pornography on the internet. We all get that. We understand that. And we also don't want it on the blockchain, right? But we all get that too. However, if you can filter one, you can filter anything that you want. We start making compromises because that's bad. And what I'm talking about is like, yes, child pornography is bad. Of course you don't want it. Of course you want to guard against it. But when you do, you will set in motion other shit. So the real problem here is who sent the transaction? Can you go find that person through, I don't know, whatever means necessary? Can you do the boots on the ground work, the investigative work to try to find the individual that put that shit there and make it his fucking fault and not Bitcoin Core and not Luke Dash Jr. and not about this fight? Because this entire thing is a goddamn distraction and it's causing real fucking problems. It's like, oh, well, that means that you want child pornography on the internet. Why would you come to that conclusion after what I just said? If you have a problem with this, then it's your problem to deal with. It is a problem of understanding what it is that you're trying to affect. And the propaganda that has been loaded out on everybody, and it's not just a few people, it's like it's so easy to spin up a narrative. Well, of course we've got to bomb Iraq. They're throwing fucking babies on the floor out of their incubators. Of course we've got to bomb Iran. They killed 32,000 of their own citizens, and they're cutting the uteruses out of women to cover up their sexual abuse, which I don't even understand, but the media bought it hook, line, and sinker. See, we can spin any narrative we want. Right now, for the whole Bitcoin core versus Bitcoin knots, the narrative is being a pedophile. If you side with Bitcoin core, you're a pedophile. If you're not on Luke Dash Jr.'s side, you're a pedophile. I don't accept this. It's just patently wrong. And you're feeding a monster that doesn't need to be fed. Starve it. Let it fucking die. Pies with 121 says, thank you, sir. No, thank you. That's the weather report. Welcome to part 2 of the news you can use, where Mara Mining, we used to be Marathon, but we now call it Mara, has an announcement. And if I can get up to the top here, I will give it to you. Mara opens door to selling stockpiled Bitcoin in a new policy shift. Now let's just look at this for a second. That was a headline that hit. Oh my God, Mara's going to sell their stockpiled Bitcoin. And the reason that we have to be careful with these headlines and these narrative spins and this propaganda bullshit is that at this point, this is mostly about getting eyeballs and getting clicks. It doesn't mean Mara's going to sell their Bitcoin, right? But yet the headlines that you see are going, oh my God, Mara's going to cut and run. They're going to sell all their Bitcoin. Let's actually read the story and find out what actually happens. Brian Danga is writing this one for The Block. Mara Holdings, the largest public Bitcoin miner by BTC held, has widened its treasury policy for 2026 to include the potential sale of its accumulated Bitcoin reserves, according to a 10-K filing with the SEC on Monday. Let's pause. When we read a sentence that says something like, Mara's treasury policy for 2026 includes the potential sale of its accumulated Bitcoin reserves, what does that tell you? The whole stack. Its entire accumulated Bitcoin reserves. That's the way that sentence reads. But that isn't also, in fact, not what Mara's saying. The policy revision marks a departure from the company's historical approach of holding mined Bitcoin as a long-term investment and follows a year in which the active digital media asset management strategy delivered mixed financial results, generating interest income, but also incurring trading losses and significant mark-to-market declines. Quote, in the second half of 2025, we at Mara changed our digital asset management strategy to permit sales of Bitcoin generated from operations, and in 2026, we expanded the strategy to allow for sales of Bitcoin held on our balance sheet. Not accumulated Bitcoin. Not language that says our whole stack, right? Accordingly, we may hold Bitcoin for long-term investment purposes and may also buy or sell Bitcoin from time to time, subject to market conditions and our capital allocation priorities. That's the sentence. That's not suit speak. That's them actually telling you what their plans are. They may buy Bitcoin. They might sell some Bitcoin. They might hold the Bitcoin as a long-term investment purpose. It depends on what the market's doing and what their capital allocation prioritizes. It doesn't mean, oh my God, they're going to sell their whole stack on the open market all at once on, Wednesday morning. Now, they may. I'm not saying that this doesn't preclude them from doing that, but their language, their company language, is taking some pretty big strides into like saying, hey, all we're doing is changing the way that we think about this. We might sell some Bitcoin. We might buy some. It depends on the market, and it depends on what it is that we're doing at the company. That just sounds like I don't know, a level-headed position to take. But according to the 10K, Mara's digital asset management strategy comprises treasury holdings, lending arrangements, trading activities, and collateralized borrowing. As of December 31st, 2025, 28% of its 53,822 BTC holdings were activated under that strategy, including 9,377 Bitcoin loaned to counterparties and almost 6,000 pledged as collateral for $350 million in outstanding credit facilities. The loaned Bitcoin generated $32.1 million in interest income. Not bad. Notably, Mara's broader push to activate its treasury encountered headwinds in 2025. The company said it recorded a $422.2 million decrease in the fair value of its Bitcoin holdings for the year, primarily due to the decline in Bitcoin's price. At the same time, a separately managed account funded with 2,000 Bitcoin at 2 Prime, company name, established in the second quarter to pursue structured trading and hedging strategies, incurred a net trading loss of $22.1 million. Mara said it terminated that mandate in December, withdrawing the remaining 1,777 Bitcoin, including fair value adjustments. The trading segment recorded a total loss of $69.1 million for the year. Well, they should stop trading Bitcoin. I'm just saying. Mara mined 8,799 Bitcoin in 2025, a 7% decrease from the 9,430 it produced the previous year. The company attributed the decline to the April 2024 halving event and increased network difficulty, even as it grew its energized hash rate to 66.4 exahashes per second. So the FUD that's good, here's the FUD. They're going to sell 53,822 Bitcoin in one batch. That's the FUD. But the real story is underneath. You actually have to dig into what the company actually said. And yet, here we are with headlines, oh my God, Mara's going to sell everything. No, they're not. They might, but I doubt it. Okay, let's go back to the United States, where 11 senators call for a federal investigation into Binance and sanctions. And I think I know why they're doing this. This is out of atlas21.com. A group of 11 senators has formally requested that federal authorities launch an investigation into Binance's compliance and anti-money laundering regulations and international sanctions. In a letter sent to Treasury Secretary Scott Bessent and Attorney General Pamela Bondi, the lawmakers called for a timely and comprehensive review of the exchange's compliance controls and its adherence to the settlement agreements reached in 2023. At the heart of the concerns are allegations that approximately $1.7 billion in digital assets were channeled through Binance to, not from, but to Iranian entities linked to terrorism, including groups connected to the Houthis and the Islamic Revolutionary Guard Corps. Investigators reportedly identified more than 1,500 accounts accessible by users in Iran, as well as potential activities related to the evasion of Russian sanctions. The letter was signed by Senators Van Hollen, Gallego, Alsbrooks, Kim, Warnock, Smith, Cortez, Cortez Mastro, Warner, and of course Elizabeth Warren and Jack Reed, as well as Lisa Blunt Rochester. The letter also highlights that some Binance compliance employees who flagged suspicious transactions were subsequently dismissed, and that law enforcement agencies have encountered reduced cooperation from the exchange in the provision of customer information. The senators also raised concerns about newer products offered by the exchange, including payment cards launched in parts of the former Soviet Union and partnership tied to stablecoin initiatives, which they consider potential tools for circumventing sanctions. The letter calls on the relevant agencies to report back by March the 13th, so in 10 days, on any measures taken to examine Binance's conduct. And you know what will be included with that? I guarantee you Iranian entities have sent their Bitcoin and, God forbid, shitcoins from Iranian exchanges to Binance, which means now we have incoming contraband into Binance. So I would imagine that we will see a headline where that scope of just Binance sending to Iran, people or Iranian people. Now they're going to say, oh, but you're receiving from. So now it's a two-way street. So I suspect that the Binance probe will actually expand. And of course, it will be used as FUD to further jack with the price of Bitcoin. On to St. Cloud Financial Credit Union. They've rolled out core integrated digital asset platform for members. Bitcoin Magazine, Micah Zimmerman. St. Cloud Financial Credit Union announced the launch of its CU Digital Asset Vault, a digital asset platform built specifically for credit union members. Essentially, the vault integrates directly with the credit union's core systems, allowing members to hold and manage digital assets like Bitcoin while keeping the credit union in control of the data, governance, and member relationships. The vault uses Deland's CUSO's coin-to-core architecture to connect digital asset activity to SCFCU's existing infrastructure, and unlike many digital asset services that hand off wallets and along with them control of member relationships, deposits, and data to outside providers, the vault keeps management in the hands of the credit union. Members stay in control of their own assets through a hybrid self-custody system, while SCFCU adds institutional level safeguards and reporting, the credit union said in a press release. Quote, credit unions need an operating model that protects the member relationship and works over the long term, said Jed Mayer, CEO of SCFCU. This vault keeps that credit union at the center while giving members ownership and security, end quote. Many early digital asset services depend on third-party wallet and or vendors that sit outside of financial institution systems, and that setup can create a fragmented experience for users and limits the institution's view of member activity. SCFCU's vault works differently. By bringing digital assets directly into its core of operations, the credit union can then oversee transactions and manage risk and keep data in-house. The platform also provides for board-level oversight and supports regulatory compliance, staying true to the cooperative principles that define what a credit union actually is. John Ungerland, CIO and Chief of Staff at Deland CUSO, said Coin2Core was built to expand the value of the credit union's existing systems. Quote, traditional vendor wallets pull deposits and member relationships away from the credit union. Coin2Core connects digital asset activity to the core, allowing credit unions to remain trusted depositories and service providers while supporting digital asset ownership. SCFCU designed the vault to support future capabilities beyond basic safekeeping. The platform can evolve to include network connectivity, transaction services, and credit use cases without requiring members to switch platforms or relearn processes. By anchoring digital assets at the core level, the credit union said that credit unions can expand services as digital wealth infrastructure develops. The CU Digital Asset Vault has been available to eligible SCFCU members since February 9th, 2026. Feature availability, limits, and policies follow SCFCU governance standards and applicable regulatory guidance. Mayer then emphasized that digital assets are becoming financial infrastructure. Quote, credit unions now face a choice. Remain the trusted gateway for their members' digital wealth, or allow that relationship to shift to third parties, he said. I would go one further. Not that just that relationship shifting to third parties while still having a relationship with the credit union, ditching the credit union altogether in Jamie Dimon's quote unquote worst nightmare, leaving the whole bank. In fact, I see credit unions with an easy win right here. Become the custodian. Offer these services to your members. Make sure, like these guys have done, that everything remains in-house, from the deposit to the services to the customer service. And that's the wrapper around everything, man. If I've got a problem, I want to talk to a human that not only knows what they're doing, but actually works for the place that I have an issue with. I want them to be an employee of the actual credit union and not, oh, well, you need to actually call this 800 number. No, I don't want to do that. This is an easy win for credit unions. If for whatever reason you're listening to me and you work for a credit union, take the chance and go talk to your boss. Trump's CFTC appoints crypto lawyer to lead shrinking enforcement team. Oh my God, it's shrinking. From Decrypt's Sander Lulls. The CFTC announced on Monday that its enforcement division, which has endured some seriously heavy cuts in the last year, will be led by a white-collar defense attorney with extensive experience representing crypto industry clients. The attorney in question, David Miller, was most recently a litigation partner at multinational law firm Greenberg Traurig, I can't pronounce it, where he represented crypto-focused clients on matters related to commodities and securities regulation. Miller previously served as a federal prosecutor in the Southern District of New York, of course, and before that, he was a lawyer at the CIA. Spook. We got ourselves a spook. Great. This is going to be great. Because he was also a consultant on the Wall Street-focused television drama Billions. Quote, Miller has a proven track record of defending market participants against the novel legal theories of overzealous regulators and plaintiffs. He will play a critical role in ensuring the division is focused on its core purpose of policing fraud, abuse, and manipulation rather than setting policy, said CFTC Chair Mike Selig. Since President Donald Trump's return to power, the CFTC has hemorrhaged staff, particularly in its enforcement division. The agency's flagship Chicago office, for instance, which once boasted a team of 20 enforcement attorneys, employed 0 as of February the 10th. Those cuts have also come at the same time the once obscure CFTC sought to dramatically expand its purview by taking over regulation of the sprawling crypto market and also the booming, controversial prediction market sector. In a statement on Monday, Miller emphasized he intends to not only foster innovation, but also protect the integrity of U.S. markets, including from fraud, abuse, and manipulation, yada, yada, yada. Since the beginning of Trump's second term, however, the scope and scale of the CFTC's enforcement actions has declined precipitously. Yeah, probably because you fired a whole bunch of people. In fiscal year 2024, for instance, the CFTC secured $17.1 billion in monetary relief on behalf of investors. That figure plummeted in 2025 by over 99.9% to just $9.2 million. Wow, that is a plunge. From 17.1 billion to 9.2 million is one hell of a drop. But it really does bug me that this guy used to be a lawyer at the CIA. And he was a prosecutor for our friends at the Southern District of New York, which basically prosecutes everybody that even looks like they remotely belong or have some kind of affiliation with quote unquote crypto. Yeah. Maybe this is all he needs. Maybe this guy and, a couple of $20 a month subscriptions to AI will do the work of the 20 people that was, cut from the Chicago office. Who knows? But that's going to be who we get. We get a spook. So yay for us. Foam finger number 1. All right. That's it. That's all I got for you today. It is Tuesday. I would love it if you guys went out and enjoyed what is now becoming, looking to me over here in Eastern Washington, like an early spring. It's a very beautiful day outside. I think I'm going to walk around in it. And when I get done, I'll see you on the other side. This has been BitcoinAnd, and I'm your host, David Bennett. I hope you enjoyed today's episode, and hope to see you again real soon. Have a great day.